going on, everybody? Thanks for tuning in to this week's episode. My name is Millennial Trader, and you're tuning into the Millennial Trader YouTube channel. Today is March 9th, 2025. And in today's episode, we're going to talk about whether the current downside for crypto markets is finally over. Before I begin, don't forget to subscribe, hit that like button. You know, it helps me out. It allows me to continue to produce these episodes going forward. And something new to look out for is on a weekly basis, I will post a macro level review of the stock market. So stay tuned for that. But in today's episode, we're going to take a look at Bitcoin, Ethereum, Ripple, check back in on Cardano, and a new coin that will be interesting for some of you is Polkadot. All right, so with that, let's just get right into taking a quick look at the Bitcoin dominance chart just to see what the overall landscape is. And, you know, as I continue to mention, so far, the Bitcoin dominance chart continues to just move up higher and higher. And so what does that mean? Basically, that means there is a tendency for most trades to be within the be in Bitcoin, or at least the safe haven where money is being allocated to is in Bitcoin. So that's notable. You can see the significant disparity in Ethereum, which I'm a little bit saddened by, because my overall market call for 2025 continues to be that from a relative strength point of view and relative outperformance, Ethereum was likely going to be that coin to outperform Bitcoins. But you know, we're just getting into the third month of the year. Still several months more to go, and nothing's really happening in the altcoin space. It's just kind of stuck in the middle range. And that's not to say that that's a good thing, because there are rug pulls happening all over the place. But nothing spectacular or altcoin season, as a lot of traders and investors have coined the term. It's not that the altcoins aren't in the same domain, or they're not getting the risk appetite that we have seen in past. So it's notable for now. You know, most of the trading continues to be in Bitcoin, and obviously there's significant money backing it, so it makes sense. But I would be wary of a lot of the altcoins at the current moment in time, because none of them are doing exceptionally well. All right, so let's get right into taking a look at Bitcoin as the first chart, the most important chart. And so a few weeks ago, I mentioned that once we breached and closed below this 95,731 level, that to me was an indication that this 9 and 13 signal from the sequential DeMark model, that in fact was likely the signal to start going bearish. And yes, we did breach through, and we had a higher high the week of January 20th, but that essentially didn't last, and essentially the bears took over from that point in time. And so from a risk reward point of view, I exited that position and I reloaded significantly lower with my first buy at 83,500, and I'm not willing to put on any further positions until at least we get to the $69,000 level. And I have that level because there are multiple confluence of signals that suggest to me that we will eventually get there. One being that I have this downtrend channel drawn, where price has been contained within this area for the better part of 3 months. And so long as we continue to trade in here, I believe that we will eventually get down to the $69,000 level. Coupled with the fact that we're currently on a minus minus 9 of 5 count. So potentially an additional 4 weeks of further downside before we potentially see a bottom in Bitcoin. And that also happens to line up with another DeMark indicator called absolute retracement from where I selected the highest point in Bitcoin and its projected downside levels as potential areas of support. So clearly right now we're at this 764 area, and it's trying to reclaim it, and you know it might, but I still expect that we will eventually get back down to this 0.618 level, which just happens to be the area from where we previously broke out from. So I'm watching that level. I'm not really putting on any new positions until we get there. And for the time being, it wouldn't be a bad idea for you to potentially put on Bitcoin shorts. But again, I'm not going to necessarily suggest those levels in this episode. I'm just doing a high-level market overview. So I'm in Bitcoin. I'm slightly down, which is acceptable for me. But the biggest purchasing that I will do is when we get back down to the $69,000 level. So something to watch, something to keep an eye on. I potentially anticipate that we will get there maybe sometime at the end of April. In the middle of April, but we'll see how that goes. All right, so let's take a look at Ethereum now. Much different looking chart compared to Bitcoin. And notice how, I've circled this minus 9 count to the downside. We're currently playing with a minus 10 of 13, which potentially could indicate full exhaustion. And we just happen to have retraced from Ethereum's all-time high about 50%. So to me, I think we're closer to a bottom compared to Bitcoin. And so if my thesis is correct from the beginning of the year, we should at some point in time in 2025 have relative price outperformance in Ethereum compared to Bitcoin. But that's as much as projecting or hypothesizing that I'm willing to do at this point in time. And I would gladly accept buying more Bitcoin if we get down to the $1,700 price point, at which point I believe is more than likely where we will end up going in the next 2 to 3 weeks as we ultimately complete the minus 13 count to the downside. Now, if I put on the Ichimoku clouds, which is a Far East technical indicator, you should read up on it because essentially half of the trading world uses this as their starting point for technical analysis. And there is significant merits to understanding what these different lines mean. But essentially, the pink line that I've colored represents the conversion line, which is basically the midpoint of the last 9 periods. So it's a faster moving average compared to the baseline, which is the midpoint of the last 26 trading periods. So that line has more implications from a longer term investment standpoint compared to the conversion line, which is more shorter term in nature, but it essentially indicates the momentum of price in the short term, whereas the baseline has greater implications longer term in terms of support and resistance. And then the cloud, represented by the green and the red lines, are projections of price into the future, and they're essentially support and resistance lines. And the size of the cloud indicates how easy or how difficult it may be for price to essentially penetrate through going forward. So that's all I'm going to say for this. Right now, I potentially think that Ethereum's closer to a bottom than Bitcoin. As I said previously, we're currently on a -5 of 9 count, whereas Ethereum, we're closer to the point of full exhaustion at a -13 count. And if I do a quick analysis of the relative strength of Ethereum versus Bitcoin, let's see what the charts show us. So even on a relative strength point of view, again, Ethereum has printed more exhaustion signals, which to me suggests that we could potentially be close to a bottom than and potentially have an opportunity to potentially buy that bottom for price continuation to the upside in 2025. So it's something that I continue to watch. I'm not putting on any new positions in Ethereum until at least 1700, as I think risk reward, that's probably a good place to hunker down and make that be the your average cost and hold that for a significant amount of time. And that's kind of what I'm doing. The third coin that we're going to take a look at is Ripple. So it's been a while since I took a look at this coin. And again, I've got a couple of different models running and have a few additional technical analysis tools. Obviously, what's notable is the fact that if we look, and it's more apparent when we look at the lagging line, which is just price projected 26 periods into the past, we have what looks like potentially a head and shoulders pattern where we have the left shoulder, the head, and then we have this right shoulder that formed. And that to me is essentially an indication of a bearish signal. So, even though, we haven't broken beneath this full exhaustion point, represented at $2.06, I believe we will eventually get back down to this 50% retracement level from the all-time high. And if I was gonna, so I'm not in the coin. Previously, I mentioned that I actually sold the top, my position at the previous high, which was at $3.35. So I'm technically I'm not in the position, and I'm not looking to be in the position until at least price ultimately gets down to this $1.69 level. Because if I'm wrong, then I'll know right away, and I'll have a short leash on it to potentially stop myself out for a few pennies. So the other thing that I will say is, if you're trying to think about what is, whether we'll end up coming back down to the 60-cent level, I generally say no, we won't. I think this is the low for Ripple, and really you're just kind of playing within this large up move where we're just essentially just trying to get price discovery. And the other negative signal that I'm seeing is the fact that we're on a -2 of 9 count, so potentially 7 more weeks of additional downside being anticipated, where that's what I'm saying. Again, I potentially think that this 169 area is likely going to be the area that we ultimately retrace back down to. Do I think we'll get back down to this 0.382 factor, which is essentially having retraced 61% from the all-time high? Maybe, but then you would have a lot of people trapped up here, and even up to this move back from November. So it's possible, but I don't necessarily think that's going to happen unless this 1.69 level gets taken out with significant follow through. So for the time being, I'd hold off on buying this coin. Um, I would wait until this price comes back down to this 169 level for me to even want to consider getting long the coin. And the fact that MACD is also bearish, is showing bearish momentum. There's a bunch of signals here that indicate to me that this is not the area to want to start buying. So I'd stay away from it. Okay, the fourth coin is Cardano. So I haven't taken a look at this coin in a long time. I was in the position, but I had sold out for a small gain right before all of this silliness happened. And to me, the chart just doesn't look healthy. If you're able to short cryptocurrency on your exchange, then you will probably have better luck shorting all of these altcoins than trying to go long and suffering significant drawdown. So for me, we just recently started the -1 of 9 count. MACD is bearish. We tried to come back to the middle line, the signal line, excuse me, but since that point in time, we've just continued to diverge even further. If I was going to put on a position, I would much rather wait until this 54-cent area, because that I think is probably a good area of support. What I will say is the longer that a support line or a cloud line remains flat, to me indicates that that is a stronger level of support or resistance depending on where price is in relation to it. So for me, I would say that the baseline of 0.81 is going to act as significant resistance going forward, and I would much rather buy the coin in and around this 54-cent range level for the potential upside in the future. But at this point in time, I'm not interested in Cardano just because the chart doesn't look healthy, and that's all I'm going to say for that. Last but not least, so a new coin, somebody that I was speaking to, a relative, had said that I should take a look at Polkadot. I haven't covered it in the past, so it just got me interested in seeing what is it that they're talking about. Maybe they're onto something, and just me being oblivious to this coin, it just maybe it should be something that I'm looking into. So when I look at this on the weekly chart, we see here that we peaked on a 13 back here, which was essentially this was the week for you to effectively take profit and exit your entire position, because since that point in time, yes, 2 weeks later, we continued to go up, but since that point in time, it's just been straight down. So when I'm looking at this, I'm wondering, okay, like what are the potential positives if I were to buy at this point in time? And right now, it's hard for me to make the case that buying here right now is potentially the low for the coin. I potentially think that there is some further downside in development, and the fact that MACD continues to diverge significantly appears that there is bearish momentum at play. But if you really wanted to put on a position, you could buy now with a tight stop at $3.92. Because if we break that level, then to me, we're probably going to end up heading further down, which is not good for the coin. And of course, it's not good for the altcoin space, because there are significantly more coins that are, significantly off their all-time highs. And this would just add to that collection of coins that that are effectively doing nothing and have lost individuals and traders a lot of money if you were going long the coin. Uh, if anything, if we break through this $3.92 level, that to me would be an indication to potentially short the coin um, for potential continuation to the downside. And when I say downside, if I take the high of this move over here, I could potentially make the case that we would potentially go down to 274 as a potential area or target for you to scale out of a short. So that's it for today. I just wanted to make a video as it's been a couple of weeks since my last one, and I did that mainly because I wanted to just wait for all of the noise to kind of disappear, give the benefit of the doubt of price action to kind of just resolve itself. And I think going forward, it's harder to trade the coins unless you're so deeply involved and know what's happening on a day-to-day basis that I think you'd end up losing more trying to day trade than if you were to just swing trade the coins themselves. And then, of course, you would modify your position size to account for the swing being potentially holding for a longer period of time, and you have things that you can kind of you can go about your day and set certain stop out levels that you don't need to necessarily monitor the market day in and day out. But again, essentially from what I'm seeing for DOT 13 price exhaustion here at 13, a 9 to the downside, we're potentially playing with this interesting area of this interesting level where that was the lowest low from this move back here, where that ultimately started the move higher. So if we breach this level, then to me that indicates we're probably going back down to this 274 level, and then you probably get a whole bunch of capitulation in retail traders, because that is essentially an area that we haven't seen going back to the beginning of when Kraken was tracking this coin. So something to be aware of. I'm not in the coin. I wouldn't be in the coin. Relative strength as well. I think this is going to show me that it's doing much worse than Bitcoin. Yeah. So again, the counts are just continuing to go further and further down. And I would not be in the coin. So that's it for today. Thanks for watching. I really appreciate if you can subscribe, like the video, comment below if there's any other coins that you want me to take a look at for next week's episode. I think doing these on a weekly basis is probably ideal for me, and it also gives me time, gives the market time to just kind of do its thing. But at this point in time, I'm not. It's very hard to be a trader trading these things, because at any point in time, if you're not watching these things hour by hour or day in and day out, you could suffer a significant amount of drawdown, both to the upside and downside if you're shorting. So that's it for now. Thanks a lot. Subscribe, like the video, and I'll see you in the next round. Thanks.